Hello, hello. Jenny Bowling here with Pivot to Prosperity, the podcast brought to you by Pivotal Real Estate Investments. And today we have Tate Siemer with us. Tate, did I say your last name correct?
100%. You got it. Yeah.
Okay. I should always ask that in advance, and I fail to sometimes. But yes, you have an amazing journey that you have followed thus far. And I want to give you the chance to tell the audience about where you're from and how you got to where you
Yeah.
are today.
Sure. Sure. Well, first of all, it's awesome to be on your show and talk to your listeners. And I hope I can add a ton of value and some inspiration, maybe, and maybe some action points. So, yeah. In a nutshell, I grew up in Cincinnati, Ohio, and out in the suburbs and kind of upper middle class background. Uh, went to I went to an all guys private high school in Cincinnati, Catholic high school, which I wasn't Catholic and have never been Catholic, but it was a really great school. I tested into that. And then I went to college in Ohio as well, at Ohio University Bobcats. And then right after college, I had a degree in psychology and was really kind of like struggling to find myself and my direction, and like really was kind of stressing, and because I just wasn't locked into any sort of vision at all, much less any sort of sense of purpose, really. So I had a few sales jobs in Cincinnati, for the 2-3 years after college, after graduation. And then I turned 26, and this was 1999, so that dates me right there. But for some reason, turning 26 was a little bit of a wake up call for me, in the sense of like, dude, I'm going to be 30 soon, and like for some reason that felt really old at the time, and I just decided that I needed to kind of shift the questions I was asking myself from like, what should I be doing? How am I going to make money? How am I going to climb the corporate ladder? Because quite frankly, in the 80s and 90s in Cincinnati, that's really what we were trained to do and kind of conditioned to do. And so basically, I asked myself the question of like, what do I want to do? Like, if I was going to take a year and just go do something cool and fun, like what would that look like? And to be honest with you, I'm not sure how I kind of had that breakthrough around asking that question, because it wasn't something I'd ever asked myself before. And it wasn't something that I had any coaching on or anything else. But I basically, I had skied probably 25, 30 times as a kid out east in different places, including a
That's
little,
snow. I'm a water skier. He's talking snow.
yeah, snow skier, right? And at our home hill in Cincinnati, which is like 45 minutes west of Cincinnati in Indiana, is called Perfect North Slopes. And I don't know what the vertical drop on it is, but it's a sled hill basically with a few ski lifts on it. And that's where I learned to ski. The first time I ever skied, I was in jeans. It was an all-night ski session, and it rained the whole time. And I fell in love with it immediately, even even in those conditions. And I knew that it was for me. And that vision, that passion or inspiration, if you will, just stuck with me even through college, where I didn't ever have the money to ski. And then after college, I was kind of, just struggling to figure out how to make a living as well, and really didn't re-engage skiing then. But just the love of it kind of lasted and stuck with me. And so I just decided that I was going to move out west and ski somewhere, and I didn't know where. And I basically flew into Denver in the middle of the summer that year and drove around all the ski towns. And at the time, I had a dog and needed a job, of course, wherever I was going to move to. And all the little ski towns are kind of tough to break into as far as housing and job market, et cetera. But Salt Lake City at the time, and even now, just has, it's a big city. Wasn't as big back then, but at the time was incredibly affordable. I think my first lease in Salt Lake was like $400. I was sharing a duplex with a roommate, and it was one of these places where I knew I could get a job, and I had a lot of experience, at the very least, as a server in restaurants and whatnot. And So was there, and the skiing here, and I'm broadcasting from Salt Lake right now, 24 years later. The skiing here is in a lot of ways kind of second to none, especially in the United States, where we just get incredible snow. We get a lot of it, really great quality of snow, and so I actually became a professional ski photographer and was out on the mountain every single day, most of the day, shooting skiers and families and that sort of thing. And obviously learned how to ski well really quickly, and just fell more and more in love with skiing, the mountain, the lifestyle, everything else. And we were talking before the recording, like I've skied here now 24 seasons and taken a detour this winter, and we can talk about that a little bit. But I even during a busy work season, which I've had a lot of those recently, I still try to get up there, 30, 40 days a year. And, I'll go ski for an hour and a half, 2 hours, and just kind of ski as hard and heavy as I can. And I'll be, it's close enough. The resorts are close enough that I can do that early morning and then be back in my office by 11:30, 12 and work the rest of the day. So it's been a really fun lifestyle, really rewarding. And yeah, that's kind of how I got to Utah. I mentioned that I was in photography. I really wanted to make that a full-time year-round sort of thing. So in addition to ski photography, I learned from my mentor at the time, who's now my business partner. His name's Carl York. He really mentored me on kind of all the things: skiing, photography, business, mountain biking, etc. And he and I basically dove into shooting weddings, like photographing weddings, and also more formal portraiture work. And then eventually I started my own company doing that. That was kind of my first real foray into entrepreneurship, although I did have some really good sales background at that point. But that was the first time I owned my own company, had my own brand, and I did that hard and heavy for 10 years. And kind of in the midst of that, around 2006, it was really clear to me that I was kind of working as hard as I could, as much as I could, and I just wasn't producing the level of income and abundance that I wanted in my life. So I was in a friend's basement talking to his roommate, like real random thing. I didn't know the guy much at all, and still don't really know him. But he was talking about how he had just bought a triplex and was flipping it, and like I was just fascinated by that concept. I honestly had never really been exposed to like real estate investing at all, but especially on like the individual level. Like it never occurred to me that was possible or really anything else. I never had a vision. I never read Rich Dad Poor Dad, blah, blah, blah. So long story short, he was in a class, and this was 2006. So this was before online education, Zoom, podcasting, et cetera. So the class was like almost an hour away, and I drove once a week to this class and just kind of learned the real basics of specifically single family investing, duplexes, that sort of thing. And I ended up buying my first deal was a duplex, like 110-year-old building. There was a tenant in one half and the other half was vacant. So I renovated the vacant half and turned around and sold the duplex. And I think I made maybe $15,000, and I thought like I had just arrived, and eventually got my real estate license, did a number of my own flips over the next couple of years, and worked with a lot of investors, or few investors anyway, on their acquisitions and dispositions in the single family space. And then the crash of '08 happened, and all of the funding and the programs that we were using to fund these deals pretty much went away. And I never really hit a stride, so to speak, in real estate at that point. I had some success and whatnot, but it always felt like a hard grind. And to be honest with you, when the crash happened and kind of the opportunities went away, I was kind of relieved and glad to get out of real estate at that point. went back into photography. Carl and I kind of teamed back up in that front. And then in 2011, Carl approached me. He obviously knew about my flipping experience, and he had some money and I had a little bit of money. And we basically teamed up in October of 2011, bought our first single family flip in Salt Lake County, and basically Salt Lake City. And we were kind of off to the races there. And when I say off to the races, what I mean is we took basically all of our own financial resources and all of our talent and time and kind of threw all that into each deal kind of on a 1-by-1 basis, and thinking that was like the best we could do, like the best strategy we could come up with. And again, this was 11. So like, Facebook was kind of a thing already. But, podcasts weren't really a thing yet. Meetup groups weren't really there. That just the kind of the intellectual thought leadership space in real estate wasn't there. And the little bit that was there, I hadn't connected to. So we were basically doing business in a vacuum, just trying to find the best deals we could when we could afford them. And in the next 5-6 years, we basically kind of almost operated in a vacuum, in a sense that we thought we were doing the best we could. And what that ended up looking like was, I think probably on like our biggest year, we maybe flipped 5 or 6 properties. There were other years that maybe we did 3, and we went from like kind of entry level, first time home buyer type product. And at the end, we were doing $1 million, beautiful houses in Salt Lake. But it was a grind, and there was there's obviously risk in any real estate investing model, but we were feeling like we were taking risks that we weren't necessarily super excited about. And we just kind of gave up, not gave up, but we just kind of moved on to some other stuff. We actually went to work for a solar company, and we're working in sales together for that for a while. And then we had a couple deals kind of fall in our lap. I actually, at some point, I can't remember exactly how it happened, but I locked into our local real estate investor association networks. There's 2 of them, 2 big ones in Salt Lake, and started going to meetings. And this was like my first exposure to coaching or thought leadership, or like high level strategy in real estate investing. And so we did a few land entitlement deals where we would buy single family lots or a couple single family lots together that were zoned so that we could basically bring in a site plan architect sort of developer and basically put projects together and then sell those entitled projects to developers and builders without ever breaking ground ourselves. And that was pretty good. And we did okay on a number of deals. And then we had a wholesaler bring us a deal, a couple deals actually, that were new build projects. So we were basically looking at buying these single family lots with old homes on them that were zoned properly for multifamily, tear down those homes and build like really high end, like $1 million units on those lots. We, kind of 3 units per lot sort of thing. And the 2 projects that we ended up doing in that space turned out to be absolute disasters, like just in many, many ways. And for a number of reasons, the genesis of which we were really green. We weren't builders or even developers really at that point. And we were, we referred to a builder to do the project for us. That turned out to be kind of the fatal flaw, where we brought on a builder that didn't have the experience or knowledge, and certainly didn't have the ethics to be doing what they were doing. And, in 6 months into the project, we were, again, really green. So we didn't kind of know what to look for, but at 6 months or so, we realized that things were really sideways, and the builder had skimmed the budget and used all the reserves, and we weren't really far along in the projects at all at that point. We had to part ways with the builder, which ended up in a legal battle with them that we had to settle on, and couldn't really find a great alternative to that builder. We did bring a contractor in because we needed their license, but ended up really managing those projects till the end. And we could probably do like a whole episode just on those projects, but
It sounds
suffice to
like
say
it.
that,
Yeah, but I want to get to where you're at today, though. So
yeah, I'm headed there. So, but suffice to say, we lost a lot of money on those deals, like a lot of money, and it was really painful. However, that time frame that we were doing those projects, we had a 12 unit multifamily project really in our backyard fall in our lap, and it needed everything. I mean, it was a gut job, and from the flat TPO membrane roof all the way down to flooring and mechanicals, HVAC, all that stuff. And we bought that project and did it, and it was a big success for us. It was the most successful deal we had done, and was just kind of a revelation for us in terms of what multifamily had to offer. I mean, we had never thought about doing apartments before that point in time, and it was, again, the same wholesaler actually that brought us these terrible deals that brought us that deal. and that was the beginning of our multifamily venture. We eventually ended up with a 20 unit out here in Utah. That was same thing, put $30,000 plus per unit into this 20 unit. We did a land subdivide on some vacant land on that deal. That was another profit center. That was a successful deal. And by then, I, in particular, kind of as the visionary in our partnership, I had really taken to this multifamily space and was really not focused on anything else from that point forward. I joined a coaching mastermind with the infamous Corey Peterson. A lot of people may know him. He's the Big Kahuna, is kind of how he's known in the industry. At the time, was very successful syndicator, still is, and that basically gave us the confidence and the knowledge and the partnership with him to start going after larger scale projects. And fast forward, like I was telling you before we started recording, and I think at the end of 2020, we were maybe into that 20 unit at that point, had done the 12 unit, but we went from basically zero at that point to 18 months later, we had 50 million in properties under management, between, I think, 5 or 6 properties in Columbus, Ohio, mostly, which we had handpicked as a target market for strategic reasons, and employment, et cetera, population growth, and I'm also, being from Cincinnati, helped. And fast forward to today, we own 10 apartment communities at this point, 6 in Columbus, 4 in Oklahoma City. We've done mostly value add projects. We started in the kind of distressed Class C space, and for a number of reasons, we don't really want anything to do with Class C anymore. And a lot of lessons that we've learned in that space as well. And it's been growing that fast and taking on multi-million-dollar projects and starting to syndicate and bring people's investment dollars in, that sort of thing, whole different ballgame than what we've been doing. And there were a lot of growing pains. And to be honest with you, there's still some growing pains for us. And
yay. And how many units? What's
right.
your unit count?
I think we're at 798. 790 something when I did the math the other day.
That's amazing.
We just added a 18 months. Yeah, we just added a 53 unit value add in Columbus, in a great location, to our portfolio. And so, yeah, we're kind of full steam ahead. We're mostly looking these days at at more of the class A, B plus sort of space. Lots of we're underwriting kind of brand new builds in lease up sort of projects, or 5-6 year old projects that are currently stabilized and kicking off cash flow that we can get good fixed rate debt on and bring, confident LPs into, limited partner passive investors, if you will. And couple side notes too. I about a year ago, I started coaching one-on-one clients in this space. People largely that wanted to move from single family into multifamily like we did, and kind of saw what I did, mostly through social media. And so I have a handful of coaching clients that I work with very in depth, intensely, and then we have a paid mastermind group that everybody's a part of as well. And as you know, I've had a podcast now for 3 years, about 240 episodes, called The Apartment Gurus. That's just really everything and anything about the multifamily space and the opportunities there. So it's become, really like the biggest part of my life by far. I'm a single guy. I don't have kids, never been married or had kids. So I have the luxury of being able to really focus and, work as much as I need to make it all happen, and travel as much as I need to make it happen. And our excitement level is still very, very high. And we're expanding our team right now. We're bringing in a investor relations partner, real high level guy. And we're really excited. So I know I just shared a whole bunch of stuff with you, Jenny, at once. So I'm sure you have some questions, but and happy to dig in.
Yeah. So let's go back to the beginning. I got to share a little bit with you about, I got it sideways after I graduated from University of Central Florida and was hired by the Department of Transportation, but I was also working a second job because they didn't pay so well. And that was the advent of 1-hour photo processing machines. So here I was printing pictures, and I never even owned a 35 millimeter. So anyway, it's kind of funny. I got to ask you then, did you get so that you could ski and film at the same time, or did you end up having to watch everybody else have fun while you were photographing?
Our product was still photos. We weren't producing videos. We were still action ski photography and portraiture. So, I'd spend 3-4 hours a day, pretty stationary on the mountain in different strategic spots, and shoot skiers as they came by, and then we'd sell them their photos at the end of the day. And a lot of it was portrait work at, like, say, the top of the mountain sort of stuff. But yeah, that's kind of,
at least you were where you wanted to be. Right. Yeah.
Yeah. And I got, at least a few hours of skiing in every day. And and I was always skiing to my spot on the mountain and skiing back. And I had camera gear on my back, and I, the curve of my skiing skills that first year in particular was just incredible. I was still 26, 27 years old, and so it was a really, really fun year, fun progression. And skiing's still number one for me. I was telling my partner yesterday, it gives me an access to kind of a sense of mastery, if you will, that I just don't really get anywhere else. Hopefully I'll get there in the business world and what we're doing. But, the thousands of hours that I've spent skiing, it has led to, like, this is like the most natural state of existence for Tate Siemer, so.
I get it.
So I love it. Yeah.
So, all right, then also, it was interesting. You did mention subdividing a property. I did want to expand on that a little bit, because you glossed over it kind of fast. And so I want to be sure that you get a chance to talk about, were you dealing with a situation where they were already legally separated lots, or did you have to go through all the steps of legally separating them?
Yeah, we did a legal subdivide so we bought the 20 unit. That our second project that we bought had basically a piece of vacant land that's actually a really good question. I'm 90% sure they were the same parcel at that point. And then we did a formal subdivide, and really just got 2 parcels in place at that point, if I remember correctly. But the second, they were both already zoned for multifamily high density stuff. So we just pretty simply did that subdivide. We didn't have to do a rezone or a variance or anything like that. And we sold it to a local developer, and for cash, and that was a fantastic deal for us, and which was just kind of a side deal on that 20 unit. So
Yeah. Yeah.
yeah,
I always like to see some extra land around the property for sure, because
yeah,
it's also a way to add services and potentially other income types of
yeah,
uses.
amenities, all that stuff. Yeah, yeah,
Right, right.
yep,
So, and then now you said you're veering more towards the AB type properties versus the workforce housing. Are you trying to buy especially like the newer builds that the developer just filled quickly below market maybe, and you've got some upside there, or is there a minimum number of dollars between purchase date and pro forma that
yeah.
you need to see before you consider it viable?
We don't look so much at that metric. We look at, yeah, like what returns we can get our investors. I mean, first and foremost. So, we target an internal rate of return on our projects at usually in the high teens, maybe even close to 20. On the stabilized stuff that we bought, from, like you were saying, from a builder that's in lease up, pretty much brand new, you're usually closer to 15 or 16 on the IRR, because of, lower risk and less upside. But so yeah, that's really our focus. I mean, we did close on 2 really heavy value add projects this year that I think this is worth talking about, actually, that they were the 2 hardest deals we've ever closed. The first one was really tough on the debt side, and the second one was really tough on the equity side. And we kind of had to pull all the strings we could find to get them done. They were very, very stressful. On the last one, I think we had 3 extensions that we were paying non-refundable earnest money to get, which adds, a ton of stress and kind of anxiety to the
Explain that a
situation.
little better so people can understand what you're talking about there.
Yeah. Yeah. So, we were under contract to buy, I'll tell you, this specific project was a 53 unit in Columbus, Ohio, older property, really great bones and in good shape, but just really dated. But it was in a great location, just north of Ohio State University, next to a massive research hospital. So it was kind of an obvious opportunity for us. And it was a $5.2 million purchase, I believe. And, which required us to raise, I think our capital raise after we secured the loan was in the $2.8 million range, which we had done many times over and thought, this is right in our wheelhouse, similar type of project that we've done in the past, should be kind of a chip shot for us. And what we found is that, I think everybody, all your listeners are aware of how much the market's changed in the last year and a half, mainly due to interest rates that have like quadrupled, or 5x or 6x. The kind of the ancillary effects that's had on the equity space, and in particular, like the retail passive investor that's investing 50,000, 100,000, they used to love those heavy value add projects because you could raise rents, go and remodel, raise rents, $300-400, get your NOI way up, maybe 18 months or something like that. And then those projects were returning 5-year returns in 2 years or 18 months. Right now, what we found in retrospect, and we didn't really see it coming, was that particular LP mentality has shifted almost 180 degrees. So, limited partners and passive investors, maybe some people in your audience that are looking at opportunities, have, in my opinion, justifiably become really kind of concerned with any loan product that has an adjustable rate, and any project that's not ideally spinning off cash flow from day one. which any heavy value add projects, you're not going to get cash flow until you're stabilized. That just presented a lot of problems for us and a lot of challenges in terms of coming up with the equity that we needed to do. So long story short, we brought in some 1031 exchange money, which required a restructuring of our acquiring entity, which would, amongst other things, incurred probably $30,000, $40,000, $50,000 in extra legal costs. And then we brought in actually essentially a seller carryback. The seller carried a note on part of the balance. And then we brought in a bunch of our own funds to get the thing closed. We're actually still raising capital to backfill some of those pieces of capital that I just went through. So, and it's a small deal, right? Like in contrast, we closed on a $17 million acquisition that was a Class A loft product in downtown Columbus, and this year, and it was really, we had a great joint venture partner group out of Cincinnati that we partnered with on that, and that was a piece of cake compared to the $5 million acquisition. So, the market's really shifted a lot. I think there's some really positive harbingers, if you will, right now in terms of the way things seem to look to be going over the next year, 6 months, that I think kind of changes the proposition from where it was even a couple months ago. But nonetheless, I think that's kind of something that your listeners might like maybe find valuable is, what we're targeting as a sponsor group, as in acquisitions, is basically much more risk mitigated scenarios that are producing cash flow from day one usually. So yeah, some big takeaways there for us.
Those are really a hard thing to find. Yeah.
Yeah, for sure.
Well, so
I would say this though, Jenny, I had to kind of process your statement there for a second. I would say that they are hard to find. Those deals are hard to find, but they're easier to find than equity for a kind of a heavy lift value add these days, in my opinion.
Yeah,
So,
I think a lot depends on who your investors are as well too.
yeah.
I was also going to go back to your statement on the RIA. I'm on the
Yeah.
board this year for our local RIA, and I'm one of
Yep.
those, as I told you, I have a big government background, and so and as an appraiser back in the 80s and through the decades, I've built my whole career around real estate people. So I see a lot
Yeah.
of people that are versed on understanding that it takes some time to get to stabilization and whatnot. So I'm not too uncomfortable explaining that it takes some time, to
Yeah.
show it's
Yep.
a new sheriff in town, a new owner and whatnot.
Right.
So I would say don't be too cautious about that, but I do
Yeah,
think
I would
that,
agree. Yeah.
yeah, this next year should be a pivotal year, to use a key word I like to use,
100%.
because yeah,
Yeah.
but like you say, there's just a few harbingers, and there's a lot of doubt out there with two wars going on,
Yep.
in the world, and
Yep.
you can't count on anything really until it happens.
Election year coming up. Right. Yeah. The
Yeah,
Fed not being super clear about what they're, all that stuff. You're absolutely right.
but
I guess
yeah,
I feel like there's always deals in any market, and
that's
I think I've
the
been around
same.
long enough to see that,
Yeah,
like, and so we're never pencils down, we're never
right.
like out of the game. We're always looking at deals and opportunities, and I'd say this too, like, I think one of our insulating factors from risk is really just the market that we're in Columbus, Ohio, Oklahoma City to a lesser degree, but Columbus just has some microeconomic factors that are extremely sexy, extremely exciting. Intel's building a $20 billion microchip factory in the northeast suburb of Columbus. And then like dozens and dozens of other tech companies, because of that, are moving there or headquartering there. And so the job market's booming with really good jobs. I mean, the Intel project is 10,000 jobs alone. And that it's still affordable. Like, and that's one of the reasons why we picked it, is because we could buy projects there that we knew were going to appreciate in value because of what was going on, and we knew that we could basically get our limited partners, our passive investors, a preferred return, usually on day one, sometimes maybe quarter three or quarter five, but that's it was kind of a unicorn market for us, and the more that we're there, the more excited we are about it.
Yeah, we're getting ready to talk. I was looking at some information, and I think I want to also revisit that market and see a little more about what's going on. It does seem to be
Yeah.
a good alternate to, I mean, Florida's been overpriced now for a few
Yeah.
years. And
Yeah, the middle Midwest market. So like really nothing north of Columbus. Like we don't really look at Cleveland or Detroit and those areas, but like the Indianapolis's, the Columbus, Cincinnati market,
right.
Louisville to a lesser extent, those markets, in my opinion, are kind of the last bastions of affordability in this country, and
Yeah.
and they're growing, right? So they're popular, like especially Columbus, Cincinnati, Indy. Like those three, in my opinion, are really worth time and effort. And Jenny, I'm here to help you personally any way I can if you want to delve into Columbus, and really anybody else. Like I'm definitely an abundance mindset person, and as far as I'm concerned, the more the merrier. The more people that I'm helping or in contact with and working on a common market with, the more opportunity I see that we have as a company. So a number of my coaching clients are, we're looking together and maybe partnering up on projects, that sort of thing. So by all
That's
means,
great.
yeah.
And I know we're coming up. We both have a hard stop coming up. I appreciate that, and I will reach out too. I got to ask you my big question though before we run out of time, and
Yeah.
then you're going to have to tell people how to reach you.
Yeah.
But
Yeah.
before I even do that, I got to ask you: you mentioned a wholesaler a few times? Do you know Vina Cox Williams?
I don't know her personally, but I'm Facebook friends with her, and yeah, I
Yeah,
know of her very well. So yeah.
she
Yeah.
rocks, right?
Yeah.
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 Yeah. And
For
then
sure.
Bill Cook is also another one that's real, yeah, present
I
up
don't know.
there
I don't
too.
know Bill. But
Yeah.
even though we don't shop in the Utah market because of the pricing, and I mean, we really don't look in Utah ever at
Oh, they're
anything.
Ohio. They're Ohio.
Oh, okay. Gotcha.
Yeah. Yeah.
Um, yeah, yeah. Perfect. I was just going to say that there's just an incredible like base of real estate investors here in Utah that, I'm
Yeah.
still in the RIA scene and whatnot. So, but
Gotcha.
we definitely don't buy here or underwrite here these days.
Right. Yeah. Yeah, I understand. So
Yeah.
tell me, who or what was a pivotal event for you to change your life, whether it's to bring you to this industry or whatever? What stands out as pivotal to you?
Yeah, I mean, I kind of alluded to this already, but Carl, my partner, 24 years with this guy, and uh, he was my first boss in photography on the mountain when I moved here. I was green at everything at that point. I was a Midwest suburb guy that could barely ski and had a little photography experience, and he turned me into his top performer within a year. I became his manager, and through all that, we were like, we were both single at the time. He's now married with kids, but we were just kind of doing everything together. And so I learned so much from him at that point in time. And then as we've grown and kind of transformed into the business and partnership that we are today, he's just been a huge part of that. And we're very different people. I'm very much the visionary in the group and kind of the face of the company, and he's very much the tactician and kind of executor on a lot of levels. And at this point, we have a lot of different interests. Him with kind of a younger family and in that whole scene, and I'm kind of doing my own single guy thing. And I mentioned to you, I'm actually moving to Mexico this year for at least making that base camp and keeping my house and stuff here. But I've said this many times for many years about Carl, is like, aside from my parents, I think he's been the most influential like shaping, informative presence in my life. And I'm almost getting a little emotional talking about it because he's just huge and has been huge. And so like, I wouldn't be anything like I am today with the skill sets and interests that I have if it wasn't for his direct influence.
That's very cool. Very cool. Especially since you're, where does
Yeah.
he live? Does he live near you?
He's here in Salt Lake.
So
Yeah.
that's
So
very cool. Yeah. Yeah. So
yeah.
I'm sure you see
Yeah.
his kids and all that too then. Yeah.
Yeah. I mean, his 15-year-old, I remember, it seems like yesterday I was taking pictures at his first birthday party, it's like,
Oh
and
yeah.
yeah, so I've watched his kids grow up and it's, and to be real, like we've had some really, really tough times, in business and which of course it, bleeds over into your friendship and we've had to work through some hard stuff and we've had to have hard conversations. And I think that at the end of the day, there's just a core belief that we both have in each other and a real love that we have for each other. And which it kind of, maybe used to say that can overcome anything. And I'm not sure about that these days. Just
Yeah.
having gone through a few other things outside of this, but at the same time, like I can't imagine anybody else in my life that I could have survived some of the things that we've been through together and kind of come out on the other side,
That's
where we
great.
have. So
Yeah.
he's a huge blessing. And I mean, just to have a friend of 24 years with, at that level is a blessing, but to be able to do business and grow and build net worth and all that stuff with somebody like that is, I feel very, very lucky, very grateful.
That's terrific. Okay.
Yeah.
It's on the hour. You tell people how to reach you.
Yeah, 100%. So, Tate Siemer on all the social medias, TateSiemer. Our website at GreenLight Equity Group is investwithgreenlight.com. And really, like I mean, my contact phone number, blah, blah, blah is on that. So you can
I'll put
reach
it in
out
the
to me
show
any way you
notes.
want.
Yeah, it'll be in
Yeah.
the show notes too. Right.
Perfect. And I love just getting on a 10-15 minute Zoom call with people and just adding value however I can and, exploring possibilities of like how they can level up and how I can contribute. So, yeah.
Great. Well, thank you so much. I appreciate you coming on, and we'll be talking more here soon, but I don't want to overdo on our time here.
100%.
Thank you.
Yeah, enjoyed it, Jenny. Thank you so much. And I'm here for you too. So like I said, whether it's Columbus or any other way that I can be helpful.